Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Friday, November 2nd. It is the end of the week, and it kind of ended like it began with the sellers in charge. So we did have a nice little reprieve midweek as we saw stocks rally, but understandably so. Folks were taking profits here today going into the weekend because I don't know about you guys, but I wasn't too keen on having a super bullish delta or anything like that going into the weekend in this market. So certainly interesting to see what's developing. I'm sure you guys have been seeing very much what I and the other coaches here at Tackle Trading have been seeing, a ton of bearish retracement opportunities. I have a few that I found in my travels today I will share with you before the day is done as well. Looking ahead to next week, though, in the earnings department, we're starting to wind down. We still have plenty to come. We have around 80 S&P 500 companies with earnings next week, including Disney, Eli Lilly, Qualcomm, Fox, CVS, Activision Blizzard. So still some fairly good-sized companies as we kind of wind down through earnings season. I don't know how everybody views it, but for me, I kind of view this as the straggler phase, especially once we get past next week. There still will be earnings reporting, but I think for me at least, I consider earnings season about over right now. And next Friday when we're talking, I'm going to consider the season over. Of course, I'll always be checking for those earnings because they can and oftentimes do have a big impact on things, don't they? So taking a look at our market again, we kind of gapped up on the open as the futures kind of rallied overnight. But we're not able to hold that as the day progressed. Saw a fair amount of selling. Here you have the S&P 500. Of course, they were not able to really even challenge the 200-day moving average today. They're kind of smack dab in the middle of the 9 EMA and the 20 simple moving average. A lot of back and forth. We didn't close below yesterday's low, which I would have interpreted as a potential signal to go in as early as Monday. But we did break yesterday's low, which does show me a little bit of weakness. I think, as you talk with me at least, you'll kind of see that breaking of that low. Now, today's low going into early next week is going to be, basically the first trigger, so to speak. I may not be jumping, into every bullish or bearish trade at that moment, but that's what I'm going to want to see, at least as a candle is developed here today. Now, that might change on Monday, right? Who knows? That would be all right with me. But certainly, the easy time is over. Now we've got that challenge. We talked about that challenge yesterday. It's easy when it's easy, right? But now we have challenge. Let's see what we're made of in the market next week. Over on the NASDAQ, definitely the roughest day for our indexes. Briefly tried, but failed pretty miserably to break that 200-day moving average, getting pushed down off of those highs quite a bit. So not a great look for me, at least from a technical point of view. Smash below the 200, once again in that bearish zone between that falling 20 and that 9 exponential moving average. So certainly, it's another bearish looking chart. The Dow actually held up, technically speaking, at least, okay today, down not too much, a little bit, but nothing substantial. The thing that interests me the most, I guess, from a chartist perspective, is we did pull back into that 200 and we did catch our footing and had a pretty decent little intraday hop off of that point. That to me, shows a little bit of strength in that index. Again, it's not done enough to say I'm a bull or anything like that. And so if you saw my watch list, you could tell that, I'm not super bullish going into early next week. But definitely an interesting development as at least, somebody who's willing to have faith. Russell, very interestingly, dojied here today. It was, really tight. We moved back and forth a little bit, but dojied right around that old support level from back in through here. It'll be interesting to see what happens. Again, we didn't even, it actually held up, from a day-to-day basis better than our other indexes by not, even challenging yesterday's low or anything like that. It'll be interesting to see going into early next week what happens when that happens, if we break today's low on Monday type of stuff. So certainly, we look like we're in that bearish retracement. Now, some people may think that this is going to be a V-shaped recovery, and they may be right. I personally do not believe that, and I'm really overall looking at least going into the first part of next week at this as that bearish retracement opportunity that I was asking for last week. All right, so we'll see how the week progresses. But if you wanted a bearish retracement, you got one. So that's definitely something that we can hang our hats on. Over in the material sector, continued to show some today. I still don't trust this sector by any stretch of the imagination. But interestingly, it was able to hold it up. It kind of came back to that low point from yesterday, 20-day moving average, and had a nice little intraday pop off of that. So hasn't shown any downward shift in momentum just yet. Let's see what it looks like when that happens. I still don't trust this sector, but it has, I've softened a little bit on my fear or hatred or whatever you want to call it of the material sector over the last couple of days, but I'm a long ways away from being on board with the sector. Energy continues to trade back and forth. I don't know what you make of today. Really, as we've talked about before, we really are kind of in an old trading range. And at least for me, that means the only places that you should be playing it is at the top or at the bottom, if at all, or you're waiting for it to break one way or the other. I don't like to play in the middle, so to speak, which is about where we find ourselves here most of this week, certainly the last couple of trading days. So for me, at least, this has gone back into that neutral range, and until we break one way or another, that's probably how I will be looking at the energy market. Financials, yesterday they were actually shaping up to potentially be my favorite bearish retracements going into next week. They did show some nice upward movement early in the day. Of course, they gave it all back by the time the day was done, kind of closing right back on the top end of that old support level that they broke down here the other week. To me, that matters. And as long as they're above that, that's going to be something I'm not, broadly speaking, of course, looking at shorting. I definitely want to make sure from a bearish point of view, I do push back down below that. The nice thing is, though, at least as it's designed today, it would have to break today's low, which would by default get me there, right? Honestly, I kind of think of below that 9 will probably be what I'm going to be looking for from the signal of the bearish side on the financials, at least early next week. If something new develops, we will, of course, talk about it. But going into Monday or Tuesday, breaking today's low, probably pushing below that 9, which started to rise. And while not a huge deal, as I've said before, that is something, in my opinion, not enough to get me on board, but enough to get me to show a little bit of respect. I probably would prefer to see that from a broad perspective. Over in the industrials, really not a whole lot different than pretty much everything else. We are kind of in that wide range between those falling shorter term averages. It started up okay, ended the day pretty down. But really, I think, again, just like most of these other bearish charts that we're looking at, it's breaking the intraday support. We didn't break intraday support, today. We didn't even come close over in the industrial sector. So, that's what I will be keeping a very close eye on, broadly speaking. I'm okay that it didn't happen today. Part of me is greedy and I want it to, so I can have a whole bunch of things to jump into on Monday morning. The other part of me is, that's all right. We can give it another day if need be. So over in the technology sector, of course, we saw the NASDAQ perform the worst of all our indexes here today. No surprise that the technology sector kind of was maybe one of our uglier looks in the form of breaking and actually closing below that previous day's low. So we actually did take out yesterday's intraday support, and we actually closed probably a hair below that. So if we were to see more downward movement taking out today's low, I would use this candle as that confirmation, broadly speaking. So tech, early next week, if tech starts to move to the downside, I don't think I will be opposed to being on the bearish side of the sector. Closing below that matters to me. Obviously, that momentum going into Monday, who knows where we're going to go. So taking out that support, taking out that intraday low as a confirmation point is always well worth paying for, in my personal opinion. I know not everybody agrees with me. People are a little more aggressive on their entries, and I understand that. I used to feel that way too, but I've gotten wimpier and wimpier the older I've got. So over in the staples, back and forth, pretty volatile, but basically closing just below that resistance yet again. So really, I mean, this has been a week for the staples sector. It's moved a lot, but we've really done not much at all, right? We did early in the week, closed above the resistance level, of course, carried over no momentum on that. And of course, here we are a few days later, still back and forth on that at that level of resistance. So we're just going to have to watch and see what side ultimately wins. As we kind of talked about before, that 55.50 approximately would be a signal from a bullish perspective. In my mind, I don't have really a price in mind from a bearish point of view just yet. I mean, breaking some lows, way the heck down here, these intraday lows over the last, over the course of this week, that's a ways off, but I would expect something new to develop before we break that, unless we have one of those days on Monday. So it'll be interesting to see where we go, but really one of those weeks in the staples where they're continuing to fight with that resistance level. Over in utilities, again, kind of continues to have a little bit of a bearish sentiment to it, but really hasn't done much. It did briefly take out that little swing from last week on the intraday, only to rally up and close back above that here today. It's kind of tough, I think, for utilities right now because it's, on the one hand, it's that defensive sector. So if we start to see a ton of selling, I wouldn't be surprised if it's a violent, sell-off as people jump into this bearish retracement early next week. I wouldn't be surprised to see utilities bounce back up. But if it's more mellow or isn't a retracement at all, it just has another great week next week, not my expectations, but I don't know the future, then all of a sudden utilities becomes less and less and less appealing. So, for me, I don't see anything early next week that's going to get me all that excited about the utility sector personally, but I guess we'll see. I guess we will see. It's always helpful to know what you're looking for before you start looking, right? So over in healthcare, gapped up very nicely on the open. Things were looking pretty good before ultimately the sector got caught up in the day selling, and it had a ways to go, and it definitely moved. It definitely sold off of the high, no doubt about that. Hasn't shown anything, again, like everything else that we've pretty much looked at, with the exception of tech, which I think you could argue has shown us enough for potential bearish signals. Haven't seen that just yet, but clearly in that bear zone. This is an area that overall I kind of like more than other areas as a bull, but that's a pretty bearish look. I'm not going to feel that way on Monday morning. I don't know if I'll be going bearish or not, but I don't think I'll be a bull on Monday morning over in the healthcare sector. But let's kind of watch how it goes and early next week. It has performed, in my opinion, has been one of the better, technically speaking, looking areas as of late. Over in discretionary, smashed into that 200-day moving average, tried to break through it, but that's hard. And closing is even harder, as we've seen time and time again. Closing above support resistance, these major averages, it's one thing to pierce it on the intraday, another thing to continue that momentum enough to close. And we're not able to do that over in the discretionary sector. It needs to get back on the right end of that for me to change my tune on it. But certainly it has shown some strength, a little more strength, honestly, than I probably thought. I did, much like many of you and many of us here at Tackle Trading and around the financial world, expected a retracement or a rally to happen in the relatively near future, as we were talking last week. So I'm not surprised it went up, but I'll be honest, I am a little surprised how well it performed. And as I was kind of looking at some different things, I was kind of surprised that I wasn't quite as bearish when I looked at individual components of the discretionary sector as I thought I was. So I'm kind of softening a little bit over there. Again, still a bearish chart in my opinion, but one of those areas that I'm softening on a little bit. I'm not quite as bearish. I got a ways to go to be bullish though, right? So over in real estate, continues to perplex me, to be honest. The only thing that ever is making any sense is this funny little short-term trend line that we continue to pop off of. And it did it again here today on the intraday, rallying off of the lows. That's about the only thing that makes a ton of sense right now. I think, again, I've not had a great handle on this for a week now, and that hasn't changed today. Break the 50, clearly get me below that trend line, then I can probably start to have a feel for the direction I'd be interested in going. Right now, this is for me a neutral, not because I'm necessarily neutral because I don't really have a very strong opinion one way or the other, and not quite got a great handle on it. Over in the communication services, fairly bearish development, was looking potentially even more so before the day was done. Look at for a bit, it looked like we're going to have a bearish engulfing close on this sector. I was able to rally off of the lows, but certainly a lot of selling over there. We see some downward movement. Again, this could be one of those areas that I think could be very interesting from a bearish perspective as we go into the early parts of next week. So, I mean, as we look at these things, you may like some areas more than I do or dislike more than I do, but I think we would all agree that the vast majority of these areas, they're looking, very close to textbook type of bearish retracement. So it'll be interesting to see how that plays out next week. That's always the kicker to me. It's easy to go up in those relief rallies because the trend, the short-term intraday type trend, just is bullish, and so everything's good. The trouble, we get into trouble, we start to break down. Do we sell dramatically? Do we, trickle in with some sellers, and then ultimately put a higher high and then take out the previous swing? Well, we'll have to see. I could see either one of those things, but right now I'm going to be going with the trend, which is on the bearish side of things. As we take a look at our metals market, no surprise, gold really didn't do much today. Had that very strong day yesterday, but pretty much, ran right into that resistance level, close just below that. And I don't think any of us here are probably all that surprised that we weren't able to break out on a Friday. I don't know, maybe you guys were. I don't think so. I don't think you guys probably were. So we'll continue to monitor that price point. But you do have to really as you think about the week that was in gold, there was some relatively, nothing dramatic, but there was some selling early in the week. And we definitely saw a nice bounce as it got to that appealing price point. So definitely a step in the right direction for the bulls. Again, I'll kind of maintain, as long as we kind of hold that area, that 50-day moving average, I think we continue to have a moderately bullish outlook on this. If you're not here, I think clearly the answer is wait for a breakout. Don't want to buy at resistance, at least myself. I never would buy anything at resistance. Might as well pay for a little confirmation in the form of the breakout. So be interesting to see if we're able to try to push through that here next week. Over in silver, we very similar. We actually ran fairly close to 15 here today before ultimately getting pushed back down and closing a little bit off of that. Nothing wrong with it. Again, this chart to me, much like gold, is really the same chart it's been for weeks. Some days are more interesting than others, but we're in this range until we're not, right? And so you're already bullish, or you're waiting for it to break 15 like I am, or you bought on that bounce wisely yesterday morning off of an intraday chart, but really not a whole lot to see here that we haven't seen several times in the recent past. Looking at natural gas, pushed into that resistance, really sold off quite a bit. You can see this is a fairly volatile candle today, pushing way down well into the halfway point of the range, rallying up off of that and kind of closing closer to resistance. Again, I really will say the same thing until we get a clear signal one way or another. You're either playing the bounces off of support and resistance, or you're waiting for it to break, from a technical point of view. And while today was kind of an interesting day price-wise, didn't change chart-wise, right? It was the same chart that we have been over in the crude market. To nobody's surprise, we took out that major level of support yesterday, and to nobody's surprise, we continue to struggle here today, right? That was a big level of support that we took out. As you look at crude, and this is, what I think a lot of people are seeing, I know I'm certainly seeing it, there's not a lot of support for a while. Now, that doesn't mean I expect it to free fall down to that, although that wouldn't surprise me necessarily. But really, there's just nothing to hold this thing up until we get down into that 57-ish range. And that's, that's scary if you're thinking about how much something can drop. It might just start going up, on Monday, but there's no great technical reason for that to happen. Certainly showing a ton of weakness from a technical point of view in the crude market, and today did not change that in any way, shape, or form. Lastly, over on our dollar, it happened very quickly, but we actually pulled back to that 96 after quite a bit of selling here yesterday. And traders, as we kind of expected, we're going to use that as a potential entry point. Just happened very quickly, and of course bounced very nicely off of that, closing about halfway back up to resistance. So very strong candle, in my opinion, coming off of that support level. That price makes sense. The price was right, so to speak. That's already, we already know that there's a history of importance at $96. Let's see if we get some upward movement early next week to see if we can actually get some folks really buying in. I wish it would have been a little slower in developing. One more down day, a doji on Monday, then some upward movement on Tuesday. But I can't always get what I want, unfortunately. But definitely have to like that from a bullish perspective coming in off of that 96. It also gives us more information that, yeah, we're not the only ones that thought 96 mattered. Right, so that's that's even maybe a little more line of sand than maybe I thought, because I've got a little bit of confirmation, right, to back that up. So it'll be interesting to see where we go early next week with that. Nikolai asked, as a trader, should you strike the first sign of profit or wait if you think you might gain more? You got burned, so you got burned today taking on some intraday stuff, Nikolai. I mean, that's going to depend on your read on the market. In a volatile market, especially if I'm trading against the trend, so i.e. bullish opportunities this week. Those are going to be things I keep on a very tight leash. So as I said early in the week, late last week, I did think it was okay to buy into a bearish rally or a bullish rally if and when we got it. Just wanted to be trading into at least things that I thought were relatively strong. But when I'm doing that, I'm definitely going to keep them on a pretty short leash because I always assume the longer term trend's going to win. I always assume first sign of trouble, people are going to abandon ship. I'm obviously not always right when I think that, but that's always going to be my philosophy. So, a lot of that's going to come down to you and how you want to go about it, of course. But for me, that's kind of one of my general schools of thought. If I'm going against the overall trend in the market, because I'm not going against the overall trend in a stock, but when the market is a downward trend and it's in the upward swing, in the upward bearish retracement phase, I am open to trading bullish. So does that give you some ideas, Nicola? I hope that answers your question. So, and a lot of it will come down to your goals. Are you willing to let it ride? And that's okay too. You can always, of course, scale out too. You can set up your trade. So I'll close out at 50% of my position. Very wimpy-like, first sign of trouble, so to speak. But I'll let the other 50% of that position ride, giving it maybe a little bit wider wiggle room. There's a lot of ways to go about it. Ideally, you have that figured out ahead of time. Whatever it might be, I'm going to scale out of 75% of my trade, no questions asked. The first time it breaks, an intraday, hourly support level or whatever, your evaluation was. So I think as long as you have a game plan, you're going to be okay there. But yeah, in volatile markets where I'm going kind of against the grain, so to speak, I'm going to be keeping them on a pretty short leash myself. So hopefully that gives you some ideas, Nicolette, and I appreciate you asking the question. Quickly, before I let you guys get out of here for the weekend, just a few things that I found through my travels that I thought I would share with you. And again, you guys, I'm sure, are seeing very similar things across the board. But a lot of interesting bearish retracement candidates, just a handful that jumped out to me going into next week. Borg Warner here, BWA, kind of nice rally into that 42 range, that 50-day moving average, which also kind of lines up with that old support level from back in through here. So we're not there yet, in my opinion, but that's getting to be an interesting price from a bearish retracement perspective. Sealed air kind of smashing into that 20, showing some momentum step out, much like the market did here today. Also kind of lines up with the earnings gap that it had back a few weeks ago. Now over on CMI, another one of those challenging that 50-day moving average type of trade. And so we see some downward movement. I could definitely be interested in a chart that looks like that. PNC kind of testing, much like so many other things out there, kind of testing an old level of support / resistance. It was a breakout point. It was support. It was a breakdown point on earnings. So very interesting price point over there. And one last one, RHI. kind of another one of those smashing into that falling 20-day moving average. Obviously, you guys can or don't have to, of course, follow any of these. I just thought I would share a handful of things. I found dozens of charts that looked something like this. As I was going through stuff today, there's a lot of bearish retracement candidates out there. So it'll be interesting to see what happens when we get into early next week as traders going through their watch lists this weekend realize, wow, there's a lot of great looking bearish retracement candidates out there. Broadly speaking, we haven't broken even that swing or that previous day's low. So that's step one, right? Whether that's enough to get you in or not, that's your business, and you're going to depend on your trading rules. But that's the first step, right? So we'll see where we go. As always, ladies and gentlemen, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell if you haven't already, and be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're following during the market hours. Of course, that's going to do it for this week in the market recap. So as always, make sure you're getting through that market scoreboard, getting through your scouting reports and your watch list, being ready to rock and roll on Monday morning. But of course, make time to spend doing the things that you love with the people that you love as well. It is the weekend, and we can have a little bit of fun. So have a great weekend, everybody. With that, get out of here. Thank you, Whitney. We'll see you next week, everybody. Get out of here. Happy trading, and I will see you all in the next one.